chart no one's paying attention to. The good old 10-year minus 2-year Treasury at constant maturity chart. AKA the 10-year minus 2. This chart here, everyone, is probably one of the greatest recession indicators out there. Let's talk about it. This chart here tells you a lot. I told you a lot about the financial crisis. Told you a lot about the COVID crashes. It told you a lot about 2017. This chart here has been a very good, crash predictor, recession indicator, whatever you want to call it, right? It tells you a lot about what's going on in the economy. This chart here now that we can clearly tell is in coiled spring territory. And coiled spring, as I like to say it, is usually when the market kind of does something like this, like builds a stick like that, and then it kind of does this before going like that, right? So this is in coiled spring territory. And for example, like a good example is that is this. You get it, you build up, you chop sideways and then up. You're now getting, again, that stick and a coil sideways and then up. And even just in recent days, this thing's done nothing but make higher lows and push up. And that's been since October, right? Here's your high, here's your low, 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 and just pushing up, right? This is not a good sign, because historically, whenever this has kind of got above that 0.65 level, right? Like, let's go 0.65 here. So that's 0.65 here on the chart, right? Whenever it kind of gets above that, things start to get apeshit. So, yeah, you don't want to see it do something like this and then move up higher, right? I am a little concerned, and we're going to talk about why this is a bit of an issue. 30-year has done nothing but, if anything, just put in higher lows throughout the last 4 years, right? And even now, while the Fed's cutting rates and whatnot, it's not being sent lower. In fact, it's actually holding over the April conundrum. What do you? I don't know. Is that a word? Conundrum. Is that okay? Anyways, but we have an inverted head and shoulders here. And I'll be honest, that's a little concerning. The 10-year doing the same thing. Very good chance here it can break out and move higher. Right? I would say that 30-year looks more threatening, but the 10-year as well looks very threatening. When the Fed wants to raise or cut rates, it usually goes off what the 2 years yielding, right? Like for example, if it's moving down, Fed's supposed to cut rates. It's moving up, Fed raise rates, right? So this indicator here kind of just shows you, right? Like when it was moving up, rates were pretty much hiking. So again, when this yield moves up, the Fed usually raises rates, right? And then you can see here when it started to move down, Fed started to cut rates, right? Rates have started to come down, and they've kind of just done that, right? A couple pauses here and there, but you see what I mean is, they were kind of hiking it all through COVID and whatnot. But the 2-year now is telling them, hey, we need some more cuts, right? That might not work. And there's a couple reasons for that. I'll be honest, I'm not an economist, and I don't want to say the wrong thing. I know my basic stuff just from trading, but I'd rather not try and act like a wannabe know-it-all. But I will say this. Every time they've cut, the yields have spiked, right? See what I mean? Is that every time they've kind of cut here, the yields have spiked, like the longer-term yields spiked, right? So there's issues, right? And there's, there's the Japan issue, there's the dollar issue, there's labor, there's housing, there's credits, whatever issues you want to throw at, right? Like, I'm not going to be the guy that sits here like fucking Tom Nash and tell you guys, oh my god, everything's going to zero, and I've been saying it over the last 4 years, and the market's nothing but go up, right? But there's issues, and we know that. Over to the SPX here, we finally got to close above our anchored VWAP, right? This is a weak close, though, I'll say that. And if you actually look at the last 15 minutes, it's kind of hard to see because we technically closed under it, but for some reason, I don't know why, TradingView is showing that it closed above. So I don't know why. Maybe the data's just lagging. I'm not really sure what's going on there, but it's kind of weird that it's showing two different things, but whatever. I I would still argue that we're right at it. You know, this is a hangman pattern. So we went graveyard to doji to, I guess, what would you call that, like an inside bar? I'm not even sure. To a hanging man, right? And the volume and buying pressure has really slowed down. So a lot of people are probably wondering, you know, why have we slowed down in this exact area? Well, I'll let you guys look at this for 10 seconds, and then I'll tell you why. So what do we see here? Where have we suddenly, mysteriously stalled out, everyone? Where? Where have we failed to push through? And remember, I said this range, like I said it in our previous video, what was it? Earlier in the week, or last week? God, I don't know, I've been making a few lately, I'm sorry, I've been forgetting. But I did, if you guys remember this chart, I pulled it up. And I told you the range. And where have we stalled out at? Where is this line right here? 68.60 roughly. Give or take, right? What do you see here that is a problem? We'll pull up again the SPX chart, and what do you guys see that's a problem? And you know what, we'll turn off the VWAP as well so we can really get a good look. You guys understand what's going on yet? So where have we failed to get acceptance into? Higher range, right? Like we have compression, break below, compression, and overall undecisiveness for what the next move is. If you slip below this and you don't get acceptance, remember about all those 7,000 contracts I was explaining. Everything is negative down until a potential support at 650.60. Potential at 6,500 exactly. Below that is 63.50, it looks like. It looks like it's 63.30 or 63.50. It's sorry, it's kind of hard to tell just going over like this, but you get it. Down here, right? But look at how much negative GEX and negative exposure is on the left here. And a lot of this is market maker short hedging as well as institutional hedging. Your pin is right at 7,000, right? It's a little bit over that. It's like 710 to 740. We talked about this pin and how important it is. And everything above it is short, is like net short exposure, right? Big problems here if you do not clear this. And it is the biggest strike before 7,000. If you get acceptance above this, you'd look towards this strike here at about 69.80. I've said this before, I said it again, but we are going into December 5th, and I'm just saying that it's looking weird. Okay? There's the Venezuela threat. There's the Japan Fed rate, or the Japan rate hike that might happen. The yen is doing scary things. Gold is doing the thing. Silver's doing the thing. We have some problems. We are not by any means clear, safe, whatever. There's a very good chance this could hit this and completely drop fast. And this drop will be quick if it pulls back off of this. If you flip under that 68.20 level, you're done. Like going straight down to these lower targets, right? Like 40 point drop in the SPY, easy 400 point drop in the SPX. Okay? If this does not close above this tomorrow, and you start the next week down, if you get a spook into the federal funds rate on Wednesday, you're setting yourself up for some problems, some big ones, right? We got a lot of data coming out tomorrow as well. Some data on the 9th for JOLTS, and then the Fed press conference, the economic projections, and the rate decision, right? You need to watch this level this week. If we close below it, I mean, this is called a bearish stalling pattern right here. Like, this is a bearish stalling pattern exactly, right? Gravestone to doji, inside bar to hangman. Like, that's not, hey, buy fucking leaps, right? Oh, we're coming into December 5th now, and our VIX is right here. Right? It's right at the top of, it's like, you know, what do you want to call it? It's bottom range. This is actually bottom range. It's inverted. So if you think about it, bottoming is up or volatility is down. It's different than just looking at the normal VIX. So just keep in mind it's inverted. But you're right here. And I mean, I can turn off this line, I guess. If you were to, you know, theoretically do something like that, there's a good chance you're going to break below and get a bit of a spook in the middle of the month. Like I said, that's probably possible of happening. If it does come down here, I think the next spook you would see, if it rides this part of the wedge, I think you would see it into January. And I'll be honest, when the Supreme Court rules tariffs and all that, I think this is the kicker. And I do see some bearish divergence into Q1 regardless of what happens now. I do think Q1 gets hot. And I think the market will actually rally at some point into the later half of Q1 or maybe the middle of the year, especially when the new Fed comes in and they cut rates, because markets are going to be like, oh my God, rate cuts, bulls on parade, right? But we've talked about this over and over. And keep in mind, I never told you guys, you know, short back here. I never said that once. I said you have to watch it come into range for the retest. So if you bought shorts down here, I'm sorry, but you're an idiot. You know, this flashed, right? I will say this, breadth is ticking down as we're trying to push into this range. We did get across on an RSI thing, but I'll be honest, RSI as an indicator, I kind of just use it for the videos. I use it for just like a, I don't know, like a psychological reference. Like RSI is a fucking horrible indicator. The MACD, RSI, all those, like they're terrible. They're lagging, they're delayed, they false flag all the time. It's not the 90s. Markets don't move that way. You have to pay attention to faster things, you know, things that move more dynamically, things that move faster, things that can sense direction a lot quicker. You know, the best way to pay attention to it is honestly just using the market Greeks, especially for trading options and futures. Or use something fast like VWAPs or fast oscillators or market breadth, or you know, or pay attention to at least some of the sectors of whatever indexes you're buying, right? And the individual stocks as well, like Nvidia, Microsoft, you know, the big tech stocks, some of the healthcare stocks, whatever, right? But I will say this: when this thing false flags red, the CSEO, it always does it before something's gonna happen, right? Like look at this. It started to false flag red, and sure enough, we topped out. This here started to false flag red back here, and then we topped out, right? But then it showed you a bottoming opportunity was coming in. Sure enough, we came right down to the bottom of the grid here, right? This thing is never wrong. It might be a little early, but I mean, how you pay attention is you'd look for it to come into the red zones before shorting, right? Like you'd look to come up here, and this is flagging, and then you would always buy at the green lines, right? Like if you look at this, right? Like you buy when it's at the green. Buy when it's at the green. Buy when it's at the green. Buy when it's at the green, right? It is a great way to scout futures, whatever, right? But with how weak this rally is going into this zone here, and breadth starting to tick down, you know, you don't want to see like just acceptance, you know, slower and below. And I'm saying like you're going into the full moon tomorrow too, and the VIX is never really like not loved going up after super full moons, right? The VIX has a very good chance to spike down. And I said that this is bullish VIX structure. Like you're not below this neckline yet. You're at it, but you're not below it, right? You could easily, you know, sweep below and come up. And it's bullish VIX structure. We talked about this in the other video, but it's not bearish VIX structure. This is bullish VIX structure. As for the market too, when the VIX gets low like this, you're usually in for some sort of a correctional phase or a bit of a drop, whatever, right? When it's high, that's a buying opportunity. When it's low, it's, you know, it's not, right? You got to be careful when it gets low, because the minute it gets super low, that's when she likes to come up, right? And when you get those VIX spikes, that is a buying opportunity. But when you get those big spikes, you know, that usually means you've just gone through a huge correction, right? But you have to be able to know that when this is about to get acceptance and go, right? The VIX is a very important metric to pay attention to, especially when you're trading 0 TTE options, right? And then you look at something like the tick or the ADI or the advanced decline index. Yeah, right? So it's something to pay attention to. It's interesting too is this month is put OI is lower on the VIX going into that 12/17 expiry for the VIX, and call OI is higher. And we look at the highest strikes here. Open interest on a 25, 24 is 175, 212, 149, 141. And I already showed you guys in that other video where we have that 33 VIX caller as well, right? Who we believe to be 50 Cent. If you guys don't know who 50 Cent is, that's a very big buyer, right? That's someone who pretty much only bids the VIX, and 9 times out of 10 they're always right. So for the put side, a lot of open interest here, but the OI change is actually declining pretty hard, right? Same with the 17 strike, you know, pretty high interest, but a little bit of OI subtraction. It's interesting, right? And we showed the IWM in the other day's video. So I'll be honest, I think a VIX spike is very possible, like very possible. Like I don't think it's by any means unable to happen, to say the least. You know, if the VIX spikes up and gets to 21, a bar chart honestly is a terrible gamma tool, but I'm just going to put this up for the video because I don't actually know if I'm allowed to show the tools we use because they're not, I don't think they're public yet. I think it's private, but regardless, 21 is basically the flip. And I mean, what's the VIX at right now? 15.78? It's a 4-point move, 5-point move roughly to get up here and to potentially get, you know, a big upswing, right? So that's gonna be the last video coming in here for this week. I'll do one on Sunday when we do the Bitcoin weekly close. But I mean, guys, don't fuck this up.